Hello everyone. Let's look at this week's market performance. So this week, starting 22nd of September, what we can see is there is a good amount of dip in the Nifty 50. We can see a dip of around minus 2.65%, which has almost really basically erased the gains of the previous 2 weeks. It is also at a crucial support of the 20 weekly EMA. Similarly, for the small cap 100 index, we find that it has comfortably broken the 20 weekly EMA as well, and it had given a dip of around minus 5.1%. So in times like this, what I do is that one of my strategies is basically to do bottom up hunting. It's basically finding a new stock or a couple of stocks ideas which I want to add to my watch list. Here what I do is that I scan for any stock which is being bought by insiders like a promoter or their relatives or the directors of the company, because they might be knowing something because of which they have the conviction to buy the company in times like this where there is a healthy amount of downfall. So let's see how we find out these companies. And also one thing is that this strategy may not work some of the time because we need to study these companies as well if they are fundamentally sound, and we need to check their health metrics and the guidance. So what I do is basically I go to this website called StockEdge. I'm not promoting this website, nor neither do I have any subscription of this. So I basically click on bulk block deals. I go to deals. I go to insider. I go a filter basically by transaction type bought and by the deal type like being bought directly from the market. Click on apply. As you can see, there are a couple of companies here which have seen recent buyings in this week. So let me go to one of the companies. Yeah, this one. It's called MNB Engineering Limited, where director has bought around 0.01% stake in the company. It's not a big amount, but let's see. I have read about this company, so we can deep dive fundamentally as well to study about this company and see it if it sounds nice. So just going to click here. I can see that uh, it, this company has been bought a couple of times more as well. After getting listed, it has been bought by the director, and it has been bought 2 to 3 times. So let's go to the screener and basically see what this company is about. So MBL, basically, if we look at a key point, you can see here. So it's basically a player in India's PEB industry. It's pre-engineered building industry. So if you don't know about this sector, actually, if it's something which is very new to you, you can just basically search this keyword in the screener itself. So what I did was I basically had pasted here and I clicked here, and basically I found that there are a couple of other companies as well who have mentioned about this term. So you can study about this sector from these companies. Like as we are going through this company, we can I've heard about this from Pennar and Interarc as well. So it's a sunrise industry actually. So it's basically an industry where you provide end-to-end solutions for manufacturing structural steel components, which is used in building warehouses and big industrial projects. So this company has two divisions actually: Phoenix division, which is mostly PEB, and Proflex division, which is basically steel roofing system. This has two manufacturing facilities, one in Sanand and other one in Tamil Nadu. It has an installed capacity of 1 lakh metric tons. The utilization is around 63% in Sanand, and in Tamil Nadu it has around 23%. It has good clienteles as well, Adani, Haldiram, and other companies. It has revenue breakup from PEB itself as 78%. So majority major yeah. So majorly it's in the PEB industry. Domestic presence and export also is there. So export is around 7%, domestic is 93.5%. In India, they dominate mostly in the Western India zone. They came up with the IPO recently where they raised around 650 crores, and most of this actually they basically used in capex 130 cr and used for repayment of their borrowings as well. Let's have a quick look at the key ratios. I find that it has a market cap of around 2000 cr, so it's a small cap company. The ROCs and ROE are quite healthy itself, around close to 30%. There is no pledge percentage as well. The promoter holding is healthy, and it has favorable debt to equity ratio. It has a good sales growth, not great but okay kind of, because I think the PEB industry itself has an average sales growth of around 20 to 30%. Profit growth is very good. We'll deep dive to see what is helping them grow their profit so much. So let's look at the profit and loss segment. Yeah, so we find that the past couple years they are having an average sales growth of around 20 to 30%, barring COVID years, which are some aberrations. Not sure why they dipped in March, but the operating profit has been pretty robust. It has been consistently increasing. So this means they have expanded their margins, but they are having some leverage, because of which maybe they're expanding, or maybe their product portfolio has changed, or maybe their geographies have changed. The interest they have been paying, it's not increased substantially, and moreover they are going to pay off their debt, so it's going to be zero as well. There is it's reasonable depreciation because of their capex. The profit before tax, yeah, so the net profit is also growing healthy, and the tax percentage is also constant around 25 to 30%. Let's look at the balance sheet now. Balance sheet, the main thing, first thing which I see is basically the borrowings. So the long-term borrowings is not huge. It's 54 CR which they are going to repay this year itself. Apart from that, I think they have other liabilities which has increased. So mostly the payables. We'll see how they are managing their trade payables in the working capital. Um, Fixed assets, yeah. So the fixed assets has increased. I think mostly because of capex. They have uh, set up some new plants and building. Okay, and I think in other assets the receivables are also fine. They have some cash equivalents left with them. Let's look at the cash flow. Cash from operating activity is positive. That's a good thing. So let's see their working capital here. So the receivables is around 95 cr. So around, I think, out of the profit, around, I think, 70 to 80% is in receivables. The inventory has increased a lot. Okay, this is something which we need to see why. Payables have increased as well. So these increase in inventory as well as payables is basically something which we need to check. The working capital is negative, but I think not huge. Their direct taxes they have been paying, so that's fine. From investing activity, I think they have a fixed asset which they have purchased. So yeah, I think the free cash flow will be negative, because 36 cr is the cash flow from operating, and they're doing capex, so it will be negative. So mostly that's why they did an IPO, to raise funds to basically support their working capital. Okay. uh, Financial activity, I think nothing. They have been repaying their debt, so that's good. um, let's look at a working capital days. So it's 36. So I'm pretty surprised how they were able to do that. That's mostly because even though the inventory has increased, their payables have also increased as well. So they're offsetting the increase by their payable days. We'll see how and why they are doing this. Shareholding is pretty good. Let's see if there is any marquee name. So Abu Dhabi Investment is one of the FI who has been invested here. DIs, I see bunch of names like Bandhan, HDFC, Aditya Birla, and in public, I think there's no notable name. So this was a past trajectory of the company. Let's look at the current trajectory. So they recently released their Q1 result as well. So June 2025, we find that there is a huge uh, increase in operating profit. There is good amount of sales growth as well. Their margins have increased as well, and as a result their net profit has also increased. So let's see what the management has commented. So what I do is basically I prefer going through the entire transcript, reading it myself, because if you just try to download these and crunch these in some AI tool, you will be able to find a good amount of information quantitatively, but qualitatively you won't be able to get a good grasp of on the management tone, and if the management is basically trustworthy and how confident or underconfident they sound. So but in scarce, if we have scarcity of time, I think the best we can do is try to extract more and more information from the AI tool. What I do is click on this screener AI. If you have the credits, you can use this screener AI itself. So what I did was I did it beforehand. I had a couple of questions, so I clicked here and I started typing this. So I just wanted to know how the PV structure is set up at the client's location. So it has mentioned that they do the entire end-to-end solutioning, from basically building these structures to finally assembling and installing them. Um, and then I wanted to inquire about the current company's capex and total capacity utilization target. So it has also mentioned that they are basically have a target of 150 to 160 crores over the next 2 to 3 years, and they are going to do it in both the plants, I think. Yeah, Sanand and in the plant in Tamil Nadu. And their target is that they are going to generate a top line of four times of capex after these are basically commissioned. So they're going to add 600 crores over the next 2 to 3 years in their top line. So they're guiding around 25% top line growth in this FY26, and they are confident about that. They also targeting margins, EBITDA margins to improve because of higher export mix. So I think this is the reason why they are having good PAT growth as well, because their margins are improving a lot in the export segment. Their current capacity is around, I think they mentioned that it has not reached the optimal 75 to 78%. It is a industry norm. It's around, I think, 50% in Tamil Nadu plant. Uh, so it's pretty underutilized. So they are expecting to reach this in FY26, and they have around 1 lakh metric ton of capacity per annum, and they are planning to increase it in both in Sanand and Cheyyar by doing brownfield expansion by around 40,000. So this is the target they are trying to achieve. In Proflex also, basically the steel roofing, they want to increase the capex to 2.2. I think they have currently 1.8 capacity, so they want to do till 2.2, 2.4. So they have good order book as well. 209 CR is the order book in for the, I think, in the Proflex division also. So I think, so I wanted to know about the top 10 questions asked in the con call, because that is where I think we get most of the insights. So one question which was basically I also had was on the working capital. So let's see what they asked. Yeah. So I found that how they are managing their working capital. So they mentioned that they had a 55-day working capital cycle during the quarter, which was 32 previously. So mostly they are doing it using the buyer's credit. So they are basically takes buying the raw materials from the suppliers on credit basis, which is on around 98 days, which they are getting. So that is why they are basically able to increase the inventory by building the products and also buying, giving like on credit itself. So they mentioned that they have for Proflex 95% of raw material imported from Korean supplier, which gives open credit of $10 million every year. So they carry 4 to 4.5 months of inventory for Proflex raw material, and on the PV side, they take buyer's credit at 6 to 7% rate of interest. Um so that credit is very cheap. That is why they are able to manage their working capital. So they didn't mention anything about reducing receivables or things like that. This looks like they are trying to take help of their suppliers to manage their working capital. On the growth side, they are confident of getting good order book. So currently they are targeting 1200 crores of order book in FY 2026. Also, about I think uh, on export margin also they are saying that in outside India, they are at least having an export margin of 1.5 to 2x of what they are getting in India. But they are cautious about this. They said that times are uncertain, and they would be able to basically commit more on this strategy going forward in some time. But they said that the tariffs in US have been imposed on have been imposed irrespective of country. So they are confident that they mentioned that they are cheaper by at least 20% in local US or even Mexico and Canada. So the highest exporter was Mexico, but still they are still cheaper. On the gross margin dip, which happened this quarter, they mentioned that they had booked only 3 crores of export and 50 crores are under the transit. That is why the margins will be showing lower, but they are confident that gross margin may be higher, at least 40% enough. So they're banking more on the export side, which will basically elevate their gross margin. As I mentioned, that they are practically debt free today. Their working capital is well managed because of good relation with their suppliers. And I think, yeah, we can ask some more questions here as well. If someone who has no credits left for using AI can upload these documents, so I also uploaded these documents, the credit ratings and the latest transcripts and the PPTs on Google LM. And I tried to create a mind map. Just had a look of what are the major things basically discussed in the latest con call. So I found one of the things in the ratings as well. So I found that their latest rating has basically upgraded from A minus to A stable. And I also wanted to know about their management. I found that there they have two joint managing directors. And also I found that wanted to know the competitive advantage, which is the margins which they are having because of export most likely. So yes, so they mentioned that uh, high margin exports and domestic business, and they are known for handling more complex project, things like this. Capacity and expansion plans also found that we read about that also. And growth drivers, they are banking on export. And order book status is currently 843 crore, but they are targeting around 1200 crores for this year. Phoenix division has 634 crores and Proflex has 209 crores. Yep. So this was a brief overview of how we can analyze this company. On the price action, actually, I couldn't find much information because it is recently listed. So I think it's nearing its support price where it had opened on the IPO day. So I think it's at a critical juncture. We'll have to see how the price pans out. Um, anyone who has a long term view can read more about this sector actually. So I have a Substack blog where I write about companies and industries. So I some time back I had written about India's uh, rising industries where PEB is one of them. So I wrote about it and I compared a few of the companies here as well. I wrote about InterArc and MNB, Pennar, and other companies which are growing basically in this sector. And also I had written a blog on comparing InterArc with MBL, basically this company. So you can have a look at this. I'll add this in the description link. You can do a quick comparison of these yourself by adding the same documents, actually attaching these from InterArc as well. So you can go there and download those for InterArc and download those from here and add it to your Google LM and write down your questions here, and it will basically come up with answers. So this is one of the ways which I follow to find out some companies which are uh, under the radar of promoters as well, or may have some good tailwinds for which the company is being bought by them. The stakes are being purchased by them. So thank you for your time. Please like, comment, and subscribe on my channel, to my channel basically, so that I can create some more videos on my strategies. Um, Please follow my Substack blog as well. I'll add all those descriptions and my Twitter link as well. Um, Thank you.